The Middle East is quietly transforming in ways few could have anticipated. While the world's eyes remain fixated on global superpowers, the United Arab Emirates is rapidly positioning itself to become the wealthiest country in the region. You've probably seen the high-end malls and soaring towers, but what you don't know is how it's all part of a much bigger plan. In this video, you'll see exactly how the United Arab Emirates is set to dominate the Middle East's wealthiest list, and doing so faster than anyone could have predicted. Surprisingly, the UAE's wealth wasn't built on massive oil reserves. It started with something far more unassuming. In fact, if you trace back to the 18th century, the area known as Dubai was a modest fishing village teetering on the edge of the Arabian Gulf. Pearling was the big industry in the region, and for generations, local communities relied on pearl diving to survive. They weren't rolling in gold coins, that's for sure. But there was an important strategic advantage: location. Dubai, positioned roughly 120 kilometers northeast of Abu Dhabi, sits near the mouth of the Persian Gulf. The city is about 120 kilometers from the Omani border on its eastern side. This vantage point allowed merchants to sail and trade easily with Persia and India. By the early 1900s, the rulers of Dubai, keen on turning the city into a trading hub, welcomed foreign merchants by reducing taxes. In a twist that probably annoyed the daylights out of neighboring ports, that little policy shift turned Dubai into a serious re-export center, moving goods from Persia and India onwards to distant markets. So if you were a foreign merchant back then, you'd look at the low taxes in Dubai and say, yes please, sign me up. Meanwhile, the other Emirates, Abu Dhabi, Sharjah, Ajman, Fujairah, Ras Al Khaimah, and Al Quwain were charting their own paths. Abu Dhabi would eventually become famous for its oil wealth, but back in the day, these emirates were mostly reliant on pearl diving, small-scale trading, and fishing. The territory now unifies under a single flag, but at that time, each emirate maintained distinct governance. In 1971, they finally federated, forging the United Arab Emirates. It was a historic move that consolidated power and resources. Imagine if 7 siblings, each with different personalities, one loves pearls, another loves taxes, suddenly decided to share a bank account. That's pretty much what happened, but unlike many families, they pulled it off. By the late 1960s, limited oil was discovered in Dubai. That influx of petrodollars helped build roads, ports, and an airport. Meanwhile, Abu Dhabi discovered considerably more oil, acting as the bankroller for many national projects. But this wasn't just about drilling wells. Local leaders took that oil income and deliberately reinvested in modern infrastructure, from highways to free trade zones. As the 20th century rolled on, the UAE had effectively laid the groundwork for what was soon to become a financial juggernaut. The big misconception has always been Dubai must be rolling in money from oil. Not quite. Oil never contributed massively to Dubai's GDP. At one point in the 1980s, it amounted to a modest portion of the Emirates' revenues. In the 2020s, that figure plunged to less than 1%. So what actually drives the growth? Dubai's strategic location, situated roughly 2,600 kilometers southeast of Cairo and about 2,000 kilometers north of the equator, means it's a gateway between Europe, Asia, and Africa. The city hosts Jebel Ali Port, one of the world's busiest maritime hubs, bustling with massive cargo ships and a free trade zone that has been drawing big-name companies since the 1980s. Then there's real estate, those iconic skyscrapers you see in every travel brochure. They're not just symbols of luxury, they're strategic investments. In 1998, Dubai began allowing foreign investors to purchase long-term 99-year leases on the property. That policy jolted the city's real estate market into overdrive. Investors from around the world scrambled to buy a property, lured by the possibility of high returns and the city's dynamic lifestyle. Tourism added another glittering layer. Starting in the 1990s, Dubai bet big on luxury, investing billions in resorts and attractions designed to dazzle. Today, icons like the Burj Khalifa and the Palm Jumeirah draw millions annually. While Emirates Airlines connects the city to over 150 destinations, Dubai didn't just invite tourists, it built a city so extraordinary they couldn't resist. Finally, there's finance. The 2006 launch of the Dubai International Financial Center, or the DIFC, created a business haven with its own legal framework designed to match international standards. This move turned Dubai into a critical link between European and East Asian financial hubs, solidifying its role on the global stage. Clearly, nobody in Dubai woke up one morning and said, "Let's rely on chance." This was orchestrated. Now, where does the UAE stand? Well, according to the Central Bank of the United Arab Emirates, the UAE's real GDP growth is projected to be 4.5% in 2025, accelerating to 5.5% in 2026, and then moderating to 4.8% in 2027. These projections are supported by S&P Global Ratings, which anticipates strong real GDP growth in the UAE during 2025 to 2027, driven by both hydrocarbon and non-hydrocarbon sectors. The IMF also forecasts robust growth for the UAE, with a projected real GDP increase of 5.1% in 2025. This upward trajectory is fueled by key sectors: tourism, transportation, financial and insurance services, construction, real estate, and communications. Frankly, it seems they've sprinkled gold dust on nearly every corner of the economy. Meanwhile, the UAE's oil sector continues to quietly operate, with production averaging around 2.85 million barrels per day in 2024, reflecting a slight decline due to maintenance activities. This is expected to stabilize in 2025. However, the real story lies in the non-oil sector, which continues to soar. By mid-2024, the non-oil GDP had grown by 3.6%, driven by manufacturing, real estate, trade, and transportation. It's clear the UAE knows how to keep a diverse economy thriving, while the oil sector takes a back seat. On the fiscal front, it's reported that the UAE's government surplus reached around AED 65.7 billion. That's close to $18 billion in the first half of 2024, up by 38.8% from the same period in 2023. Tax revenues increased by over 20% in just 1 year. We're talking about an economy that continues to surge, partly due to strategic foreign investment deals. CEPA agreements with various nations have boosted the UAE's non-oil trade to a staggering AED 1.3 trillion, equivalent to 134% of the country's GDP in the first half of 2024. That's a telling statistic. The UAE's trade volume surpasses its entire GDP, an undeniable indicator of its status as a global hub for commerce and its dedication to fostering international business. What's interesting is how effectively the leadership invests in public infrastructure. Dubai has advanced highways and a famously futuristic driverless metro system. Pedestrians are often overshadowed by the city's vehicle-heavy layout, probably thanks to that relentless heat, but with improved rail networks and a push towards sustainable energy is transforming daily life. The Dubai Clean Energy Strategy 2050 invests heavily in solar power, aiming to shift a significant portion of the energy mix towards renewables. Education and healthcare are also seeing continued growth. International universities such as the American University in Dubai and Zayed University draw students from around the globe. In healthcare, the UAE has steadily positioned itself as a hub for medical tourism, featuring top-tier hospitals capable of handling everything from cosmetic surgeries to complete cardiac procedures. All these ventures, education, healthcare, tourism, financial services, generate revenue streams that replace any over-reliance on black gold. The result is a dynamic, diversified economy driven by a government that knows how to seal deals and a population that's equally ambitious. Some forecasts indicate the UAE's economy is gearing up to reach even greater heights in the coming decade. Non-oil GDP growth is expected to hold strong at about 5% in 2025 and even surpass that in subsequent years. That's not all. The government has a knack for forging new partnerships. With more comprehensive economic partnership agreements being signed, watch for greater flows of trade, investment, and yes, people. Abu Dhabi's focus on high-tech research and renewable energy, signaled by projects at Masdar City, continues to position the Emirate as a leader in sustainability. Meanwhile, Dubai is going full throttle in finance, fintech, and possibly more space-related endeavors. The Emirates' Mars mission is ongoing, and who knows what cosmic goal they'll chase next. Maybe we'll see a big sign on the moon one day that reads, "Sponsored by the UAE." Wouldn't that be something? On the cultural front, the UAE has flourished as a global melting pot, attracting talent and diversity from every corner of the globe. It's not unusual to find entire neighborhoods in Dubai populated by expatriates from Europe, Asia, and North America. This influx of global talent fuels growth in both the private and public sectors. It also fosters a cosmopolitan environment. exemplified by the high number of languages spoken in the bustling malls and financial centers. Meanwhile, locals remain proud of Emirati heritage, reflected in national attire, cultural festivals, and the ongoing importance of Arabic as the official language. So is the UAE secretly becoming the richest country in the Middle East? The data suggests that it's well on the way to that top position, if it hasn't already seized it. The UAE stands as one of the Middle East's most stable, forward-thinking economies, with strategic real estate developments, robust global trade networks, a thriving tourism market, and the financial magnet that is the DIFC. The Federation's trajectory shows no signs of slowing down. What does this mean for the region and for the world? First off, it means that the UAE is becoming more than just a destination for luxury vacations. It's turning into the financial nerve center for businesses wanting to access markets in the Gulf, Asia, and Africa. Anyone ignoring that might end up on the sidelines of an economic revolution. Second, this prosperity can spur regional competition. Places such as Qatar and Saudi Arabia are also diversifying. They're eager to attract foreign investment to keep pace. The landscape of the Middle East is transforming in real time, and the UAE is at the front, brandishing an ambitious plan for success. Think you know why the UAE is rising so fast? Share your thoughts in the comments, hit like, subscribe, and let us know what topic we should cover next.